Well, it looks like that crypto demand is rising so fast that certain exchanges and trading platforms actually have an issue with keeping up with demand. Now, we saw multiple times over the past month Coinbase having issues with they say connectivity, maybe it's server related, but personally I think it's just the servers can't handle all the new volume of people coming on and buying cryptocurrency, whether Bitcoin, Ethereum, or altcoins. But now another one, eToro, while they haven't had any issues, they're actually limiting the amount of new users they're getting. This is the official tweet from eToro. eToro has seen an unprecedented demand for our services from new users. To manage demand and ensure our existing community of 17 million registered users can continue to access our service uninterrupted, we have temporarily increased the minimum deposit amount for new users to $1,000 US. The platform, which mainly caters to social or beginner traders, raised its required deposit levels to $1,000 from $200. So from $200 to $1,000. They didn't even just double it; they dramatically increased it. So very interesting here what we're seeing. Personally, I do think this will probably just be temporary. I think they're probably just doing this until they upgrade their servers. And I think that because they advertise themselves as a platform for beginners, for social traders, right? People who usually go off of other people's advice and they follow other traders. So, if they're trying to be the platform for beginner cryptocurrency traders and investors, they probably don't want to discourage people with that $1,000, price limit. For our deposit limit rather. So I do think this will be temporary, but I think this goes to show that the demand for cryptocurrency is going up dramatically. And I think one of the big reasons, other than just increased adoption, institutions getting involved, instilling confidence in the market, is, where else are you going to be putting your money? We see the US dollar being printed out of existence, right? I know that's a funny way to put it. How can it be printed out of existence? But essentially, as the government prints or adds electronically more dollars to the money supply, this of course leads to devaluation of the dollar. Now, this doesn't always happen immediately. It's not like they print a ton of money and right away prices go up. But over time, this could really devalue the dollar. And I think it was like 60% of US dollars were printed in 2020. Obviously, we had an unprecedented issue with different things going on, them closing the country. But regardless, I think with the US dollar losing strength, I think it's only going to help cryptocurrency. I think other assets will rise as well, but I think cryptocurrency is becoming a very attractive asset for many institutional investors, rich people, wealthy, who don't want to just keep their money in cash. And I think right now the retail buyers are starting to get on board. We've seen from this bull run, it's mostly been institutional investors, and now we have the second wave of retail investors starting to get on board right now, and that could push things even higher. I actually bought some more Ethereum yesterday when it was down a bit. I bought it, I think it was at like 1,100, maybe between 11 and 1,200, and I'm happy to see it's up 9% today. So that is very nice. Bitcoin's up as well. XRP is up a good 7%. Stellar is up 10%. Chainlink is up about 20% on the day. If you enjoyed the video, be sure to leave a like, subscribe, share it. I will catch you next time, and as always, have a great day. There has never been a better time to get a VPN. Right now, PureVPN is giving 62% off of their 1-year plan and 88% off of their 5-year plan if you use my link in the description. That again is 88% off of their 5-year plan and 62% off of their 1-year plan. If you're worried about hackers or intrusive government gathering your personal information, look no further than PureVPN. But you have to act now because this discount will not last. Once again, click the link in the description.